Hey guys, welcome to my weekly breakdown channel where I'm gonna share my technical analysis and my bias for the week. And once again, welcome. I'm gonna leave a Telegram link where you guys can contact me for signals or for a course. So basically, I'm gonna do this weekly and I'm gonna share my entire overview on setups, outlooks, micro, macro fundamentals, bank reports, and institutional data. So once again guys, for the third time, welcome to my channel. I hope we can grow as a family, as a community, and I hope you guys will enjoy every video that I post. So let's get into it guys, no more yapping. Okay, so guys, I'm gonna put on my indicator that identifies my highs and lows for me. So the DXY, we all can, before I start talking, the DXY is an overall downtrend. So we don't look for buys in a downtrend, we only look for sells. It's that simple guys. So since August up until now in September, the DXY have been consolidating in this range, but finally price broke out, came back, tapped into this supply zone on Thursday. So meaning, and it had a beautiful bearish engulfing candlestick pattern and a change of structure in the 4 hours. So it means guys, and look at this beautiful rejection by sellers are pushing in once again with a bearish engulfing pattern, candlestick pattern. So it's this simple guys. There's not much to discuss on the dollar index besides I'm personally thinking it's gonna drop this week, especially with the Fed cards coming in. So let's move on to the euro feature, the euro currency alone. So basically guys, it's the same thing since August up until now September. It's been in a range. It finally broke out to the upside. I think it might come back to close this gap on Monday, and then it's gonna buy. So okay, similar for the pound. The pound had a consolidation phase since August as well. It finally had a change of structure and now it's gonna push up. Okay, so here's the real stuff. I'm currently in euro US dollar for buys. So as you guys can see, it's a simple setup where I have my daily high, daily low, a break of structure, and just for extra confluence you can add your Fibonacci level. Okay, I don't use the 50% Fibonacci level, but I know for a fact that it's on the 50%, and this was my past technical turning point, was on this demand, but finally price moved. So on the 4 hour, basically we also ranged since the start of August up until now. So before I entered, how I got this trade was simple. I looked for liquidity sweep, a change of structure. Price obviously came in this daily demand. That's another confluence. So far we had the liquidity sweep, the change of structure, and the daily demand. That's 3 confluences. Then I took the Fibonacci level. The fourth confluence came from the 0.618 level, and I went on the 1 hour. So how I got this was after the news, when the New York market opened. So on the daily time, on the 1 hour time frame, basically I had liquidity sweep, and after I basically entered, so we had 5 confluences with the liquidity sweep, and then the sixth confluence came from this engulfing candle, and the 7th confluence came from the change of structure. So we have 7 confluences. Why I took this trade. And another confluence would be, once again, if you use the 50% Fibonacci level, that would be another confluence. As you guys can see, the Fib level touched, but I don't use it, so I won't count that as a confluence. And this 1.17 level was actually a bank level they spoke about on Friday. They expected a pullback around that number. It happened. Obviously depends on your strategy, your entry model, how you would have seen it. Some people would have said there's a fair value gap. Some people would have said a change of structure after liquidity sweep, there was a fair value gap. Some would say change of structure, liquidity sweep, a 50% Fibonacci level was tested with a entry candlestick of a engulfing candle. So basically, yes, this is how I got my trade. Then EURGBP. So EURGBP, similar. We had as you guys can see, we had a change of structure here. Price pushed up, made a higher high, came down, created a higher low, a daily higher high. So we are obviously in a uptrend, like it's so obvious by now. So what I did was boom boom boom, actually looked for a liquidity sweep over here. I don't know why I took it off, but okay. So my confluences would be, the daily time frame is an uptrend 1, the 4 hours in the uptrend 2, because we had a change of structure with a higher low, higher high. The liquidity would be the 3rd confluence. Then we had this 4-hour demand zone, that's our 4th confluence. And then the 5th would be, I actually entered off here. I entered on, I wonder why, let me see on the 30 minute. Okay, yeah, on the 30 minute, I don't, did I enter on the 15 minute? No, sorry guys, I'm just a bit confused on what time frame I actually entered this trade. Okay, but anyways, let me not confuse you guys, it doesn't matter. So basically, on the another confluence would be a 1 hour liquidity sweep and a change of structure. Price came back. If you, for example, if you wanted the entry after the change of structure, this demand would have been the ideal zone. And personally, if I had to enter this trade on this, I would have entered after this candle, put my take a stop loss over there, and I will target a 1 to 2, but this would have been good candlestick on reversals, doji, pin bar, engulfing candle. So yeah, this was my reason on my enter. I'm looking at a 1 to 2 as well, and then this would be my last position. I actually entered. I scaled in on the 30 minute, sorry, on the 1 hour I scaled in. No, sorry guys, sorry. I remember it was on 30 minute. Yeah, change of structure, break of structure, then I entered again. So we can quickly check. We have a clear change of structure, break of structure, high low, high. Guys, in the comment section, please tell me if you don't understand something, why I maybe took the trade or anything. Just ask in the comment section and I will see if I can make a video about it. Once again, confluences would be the liquidity sweep, break of structure, the demand zone over here, the FERB level, 61.8 level, and then I went on the 30 minute. So basically the first entry I entered was on this big candle here, was on this candle. My second entry was on this 30 minute setup where a change of structure and price came back, had a liquidity sweep, then I waited for a break of structure and I actually saw this fair value gap over here as another confluence on why I should enter this trade, and then the FERB level, also the 61.8 level was tested. So there was more confluence, and also my 200 EMA that I would quickly pull out to show you guys that supported the trade. Okay, so let me take this off. Okay, so yeah, as you guys can see, the 200 EMA supported this trade, and I actually took the trade over here. No, sorry, I meant over here, sorry, yeah, because the indicator I used didn't print the higher high yet, so I had to wait up until here. That's why I entered so late, but it's okay because price actually just consolidated, so then I entered over there. And now I'm gonna wait and see how the market behaves and moves. So this is basically my bias I had for this week, and I'm gonna create another week video where I'm gonna look for the new week that's about to happen. I'm gonna show you guys more inside info